Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence. He joins me to discuss Nasdaq 100 valuation versus fundamentals growth. Mark, certainly a hot topic. That's what everyone in the marketplace is discussing in terms of valuation and are these good entry points. But before we get into that, let's do some March Madness here. Let's talk about the Elite 8 versus the rest of the Nasdaq 100 index.
Sure. Thanks, Jill. Always great to be with you. I'm a big fan of March Madness myself, personally. There's a lot of great stuff going on this month. In fact, with the 25th anniversary of the Qs coming up, of course, that's the biggest ETF that tracks the Nasdaq 100 index. So lots of exciting stuff in March. The Elite 8 moniker, I think, is totally appropriate. Broadcom, which is a diversified semiconductor company, has kind of been broadly recognized over the past year as being one of those other main beneficiaries from the generative AI secular growth trend. Not quite to the level of NVIDIA, but they had just a knockout 2023, up over 100%. They are now pretty much almost tied with Tesla in terms of market cap. And given the timing of the most recent index recon and rebalance in December, their index weighting is actually substantially larger than Tesla's already. And that's a function of the performance that you've seen since that recon. And so this is what we're seeing mostly this year. Year-to-date performance for Broadcom, ticker AVGO there in the green, you can see is up 16.5% in the first 2 months of this year, versus Tesla down almost 19% there at the bottom. Kind of telling you the story, right? That what happens within this group is usually not a single storyline. The EV trend has kind of slowed down a little bit in the US and globally. There's been a lot of sort of pricing pressures from the supply end initially, and there's been some demand weakness now more recently that's kind of hurt Tesla and a lot of other EV makers globally. So they've really been struggling. They've not been knocking it out of the park in terms of earnings, in terms of revenue, in terms of guidance the last couple of quarters. Apple's also been struggling a little bit due to concerns about China. The fact that, they may start to see smaller market share in China. They may even get some restrictions slapped on them. The Vision Pro kind of met with mixed reviews. So Apple's down 6% year to date. Google's about flat. And then you've got, Amazon up about as much as Broadcom, Microsoft up 10%. Meta up almost 40%, and NVIDIA, again, leading the pack this year up almost 60%. What does that all tell you, all in? Nasdaq 100 up a little over 7% in the first 2 months of the year. That is a few percentage points better than the equal weighted version. A lot of folks were thinking maybe equal weight will start to outperform this year as that rally starts to broaden out. It's going to be tough to do that if NVIDIA and Meta are putting up these type of numbers.
Right. And Mark, let's talk about performance by company that you saw in 2023 and some trends that were discernible, because not all companies behave the same in terms of performance.
Yeah. So there's a lot going on this chart. I realize that. The main things that I want you to keep in mind looking at this is the size of the bubbles just correlates to the size of the index weight. How big is each company in the Nasdaq 100 index? The colors of the bubbles tells you, did the valuation over the course of 2023 get cheaper? That's the green. Or did it get more expensive? That's the red. And so the further out you are on the right-hand side of this chart, the better your performance was. And the further you are up on the chart, the better your earnings growth was throughout 2023. So you see NVIDIA there at the very upper right of the screen, just an insane outliner with price performance up 239%, but their EPS, their forward EPS looking 1 year into the future for this year versus a year ago when they were looking into this prior year, that number was up almost 4 times, 380% increase in next 12-month EPS. So in that instance, their valuation actually went down by approximately 30% over the course of the year because that earnings growth driven by generative AI and their leadership position in the most advanced GPUs has just been, I think it's not an exaggeration to say a once in a lifetime type of event in terms of the size of the company and how much it's had to revise its forward-looking forecast. Meta, which is also kind of out there far on the right, right? They were up almost 200% in price last year, but their EPS was up over 100%. So they did get more expensive, but that was off of really trough valuation levels in 2022. When sentiment around the stock was really weak, they turned things around quickly in terms of cutting costs, improving their efficiency, their profitability, and really starting to monetize again in the field of AI, a lot of the advancements that they're doing. And so, you know, in the case of Meta, it's mostly, again, a fundamental growth story and earnings acceleration story with some normalizing valuation. And I would say, as earnings accelerate in general, you would expect valuation for a company or a sector or an index to go up, because the faster the earnings growth, the more you should be willing to pay for that stock or that index today. You'll see Tesla on this chart in the dark red. It's the only one really that is in dark red because it was up a lot in terms of price last year. And actually its EPS was negative. It was negative 30%. So its PE almost doubled over the course of 2023. And I think that's where you're seeing a lot of the weakness year to date in 2024. People are sort of realizing that they have to give back some of that. And then you see kind of a mixed story with the rest of these. Amazon, you know, another one I think interesting to point out. It was up 80% in price last year. EPS was almost doubled over the course of the year. And so its valuation actually shrunk. It got cheaper by about 11% in 2023. Some of the others here, it's a real mixed story again of like, it's getting a little bit more expensive, but the earnings picture, the earnings trajectory has accelerated upward. So in many cases, that is, in my mind, justified. You should be willing to pay a higher multiple for a higher growth company, all else equal.
Right. And Mark, we'll see this on the last chart here. And that's really what the marketplace is asking itself with the multiples that have been rewarded to these companies. Do the growth fundamentals support that?
Yeah, so I mean, this is a really, really zoomed out view going back almost 2 decades, high level for the overall index, the Nasdaq 100. Everything here is equal weighted, index weighted. So if you look at the green line, that's your PE over the course of this time frame. That is a backward-looking, actually, measure of PE. And what I want to point out to you and the viewers is it really depends in a time like this when you're seeing earnings estimates revised up as much as you have. We saw an almost 30% increase in the forward-looking 12-month EPS at the index level over the course of last year. That's not something you're going to see in a backward-looking PE measure that basically will only pick up around 10 or 11% earnings growth at the index level in 2023. So even though the PE on a backward-looking measure here looks a little bit high, approaching 35, which is sort of the upper end of that blue box that I've boxed around, that's kind of the most of the observations we've seen for PE for this index over the past 2 decades. It really depends what's driving that, right? Is it purely price or is it earnings accelerating out into the future? And you can see with the purple line there, which shows you that next 12-month earning per share, it's been a little volatile recently. We had a big spike up during COVID. Then we had the normalization in 2022. And then we had another big spike up when the generative AI growth theme really got going about a year ago. That I think still has some time to normalize in terms of what impact it has on the overall valuation of the index. We need to reach kind of that stable level of growth in earnings before we can really decide, okay, what's the right measure to use here? I don't think it's past it's backward-looking EPS, which is sort of what you'll see a lot of times in the headlines.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.